Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex language of big business to see what is really going on behind the scenes. And today we're diving into a filing that might just reveal how Vivakor Incorporated is trying to raise some serious cash. Alright, so Vivakor Incorporated has just dropped a report about a pretty important event that happened on the 30th of October of 2025. It involves them selling some of their stock and some special options to buy more stock to a group of investors. They're calling this sale a registered direct offering. This kind of report is standard for public companies when big things happen, like when they make a deal to get more money. This is Vivakor Incorporated's official report. Remember, they're the company whose stock trades under the symbol VIFC on the Nasdaq Capital Market. Now, Vivakor is marking itself as an emerging growth company. This means they're still relatively new and smaller, and get to follow some different, often simpler rules for financial reporting compared to older. Larger companies, they've also checked a box saying they don't want to take advantage of a special rule that lets them delay adopting new accounting standards. This usually means they want to keep their financial reporting up to date with the latest rules right away. The main news here, the really juicy stuff as we like to call it, is that on the 30th of October, Vivakor made a deal with some investors. They're going to sell them over 10 million shares of their common stock. So think about it this way, they're selling 10.6 million shares at 18 cents a share. That in itself is a decent chunk of change, but they're also doing something else pretty interesting. They're also selling what they call pre-funded warrants. These are basically options to buy shares later, but they're structuring them so they're as good as owning the shares right away. They're selling about 3.5 million of these at just under 18 cents each. When you add it all up, the company expects to bring in about $2.55 million before they pay off the folks who helped them make this deal happen. They plan to use this money for general business operations and day-to-day expenses. And get this, the whole deal wrapped up super fast, closing just the next day on the 31st of October. That is a pretty speedy transaction for a public offering. These pre-funded warrants are special. They can be used pretty much right away, and it only costs a tiny fraction of a cent to turn them into actual shares. They'll be exercisable until they're all used up. Now, there is a smart little clause in these warrants. It stops any single investor from buying so many shares through the warrants that they end up owning more than 4.99% of the company's stock. They can even ask to increase that limit to 9.99% before the warrants are issued. This is a common way for companies to prevent a single large investor from gaining too much control too quickly through these types of deals. To help make all this happen, Vivakor hired a company called Vivakor Capital LLC to act as their placement agent. That means they helped find the investors and arrange the sale. For their work, Vivakor Capital is getting a pretty significant fee, 7% of the money raised. That is a good chunk of change. The shares and warrants were sold using a special kind of registration statement already filed with the Securities and Exchange Commission. Think of it like having a pre-approved permit to sell stock, if the conditions are right, which they were on the 30th of October. Beyond the deal itself, Vivakor also put out a press release on the 30th of October to announce the details of this stock sale. This press release, which is part of this filing, is essentially the company's official announcement to the public about the stock offering. Companies often do this to share news and get the word out. And of course, like with any formal report, they've included copies of the important documents related to this deal. They've included the actual form of the pre-funded warrant they're issuing. This is like the official contract for those warrants. They've also filed the form of the securities purchase agreement. This is the main contract that outlines the terms of the sale between Vivakor and the investors. And the agreement with Vivakor Capital, the placement agent, is also filed here. This details how they'll be compensated and what services they'll provide. Finally, the press release that announced the pricing of this offering is attached as well. These exhibits are important because they give us the exact wording and details of the agreements. And here you see the signature of James H. Ballengee, the chairman, president, and CEO of Vivakor Incorporated, confirming all of this on the 31st of October 2025. Now, let's look at this from a bigger picture. Vivakor Incorporated is raising capital through issuing stock and warrants. This is a common strategy for companies, especially those that are growing or might need funds for specific projects or to cover operational costs. The fact that they are an emerging growth company and that the offering closed so quickly suggests a few things. Investors were likely willing to put money into the company, and the deal was structured to be attractive and efficient. However, with any stock offering, especially from a company of this size, there are always risks. The price of the shares and warrants is relatively low, which can sometimes indicate a company that is still building its market presence or facing financial pressures. The large fees paid to the placement agent also reduce the net proceeds available to the company. But The use of proceeds for working capital and general corporate purposes is a broad statement, and it is always good to see companies have clear plans for how they'll use new funds. The key question moving forward will be how effectively Vivakor uses this capital to drive growth and improve its financial standing. What is your take on Vivakor's latest move? Do you think this stock offering is a smart play for the company's future? Or are there red flags you are seeing? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights like these. And don't forget to join our Discord community, linked in the description for more discussions and real-time analysis. Thanks for watching. See you next time.